analyst team. So let's get in some market opinion now. We have Swati Kulkarni, the Executive Vice President and Fund Manager at UTIMF, joining in for that. Swati, hi, good to see you in today. You join us on what has been quite a difficult week for the markets as well as a difficult day. What have you made in terms of what might be plaguing the markets in the past couple of trading sessions? And do you think that the FII outflows are possibly going to increase going forward?
Clearly, the weak earnings season and the worries about the monsoon is what is hitting the market in the near term. While it is tough to take a call on the outflows from FII, I think it's better to look at the relative fundamentals. And from that perspective, I believe that India still stands ahead of most of the emerging markets and most of the developed markets as well, as far as the long-term potential is concerned. So it's really very difficult to take a call, especially when Fed action is due somewhere in September, that what will actually happen as far as the FII outflows are concerned. What we are hearing from the market is the long-only fund are definitely looking at certain pockets wherever the valuations have turned little bit acceptable, and still the asset allocation is yet to happen as far as the ETF allocation is concerned.
All right, Ms. Kulkarni, we'll take that view coming in from Ms. Kulkarni. The Bank Nifty is not doing well, but we have seen IT as well as pharma. They have been that defensive sector that normally money rushes to. Would you find that attractive at these levels?
So, for IT particularly, the growth rates have come off, but there is a digitization which is going to drive the business growth as such, and also in terms of if you assume that sometime once the Fed starts tightening, the dollar might remain strong, and hence you could benefit of the currency depreciation, and these sectors, probably IT and pharma, they will tend to benefit out of that. And in terms of pharmaceuticals, especially the ones who are targeting the US generics market, I think the pipeline is something which attracts investors, and reasonable valuations considering the pipeline would actually suggest that we could look at these as defensive. Of course, there is a risk of the 483s which are hovering for most of the pharmaceutical companies. Hopefully these will get addressed and they don't convert into import alert as such, and hence that space is looking attractive, both IT and pharma from a, I would say, defensive perspective in these volatile markets.
Okay. Swati, how important is any sort of news on the minimum support price or the MSP from a market perspective?
I guess, see, if you look at from an inflation perspective, we have, for CPI, we have a favorable base till maybe September, October. So we will first see CPI coming down from the current levels. And MSP will not be too much of an, impact as far as the food prices are concerned. I think the more impact could be from the monsoon-related worries which are talked about, of the possibility of a below normal monsoon. But in terms of the impact on the rural demand as such, I guess some bit of slowdown is already witnessed in the discretionary side of consumption. It's still the staples is not yet impacted as far as the rural demand is concerned. So I think MSP is now being taken more from a having a fiscal correction point of view, rather than that affecting the ultimate corporate earnings as such. Okay. So I would like to wait and see what the impact could be on the inflation. I think it won't be immediate. The immediate impact on the inflation, the expectations on the inflation could be more from the monsoon, not so much from the MSP as such.
Okay, well, Swati, just one quick last question to you. Then I'll take what Nigel was asking Jagdish and pose it to you. That would you be really wary of the mid-cap index, or are there any select stocks that you would look at this point?
I think in select stocks, definitely the valuations have turned attractive, something which we, we're finding it very difficult to look at which has corrected about 20 to 25%, and the mid caps where we have certain competitive advantages and growth is visible. I think we are looking at this. So there is a selective approach, but having said that, clearly at the indices level, mid caps have moved to a premium as far as the valuations are concerned versus the large cap indices. So I would avoid saying that in general mid caps have become attractive, because the corrections are similar in the large caps also. Like you have many large cap auto names which have corrected maybe about 10-15%, and across the boards, of course, banks have corrected about 10%. So we have attractive, large caps also. So I would take a selective approach as far as the mid caps is concerned, and not an overboard
Sure.
at this point of time.